In the past year and 3 months, our consistent recommendations to add QQQ, semiconductors, and specifically Nvidia to our portfolio have proven to be highly rewarding. Today, we are reaffirming our position on a new company, ARM Holdings, symbol ARM, as a valuable addition to short, medium, and long-term investment portfolios. This video will delve into the compelling reasons to include ARM Holdings in your investment strategy, providing specific entry points for buying into the security. ARM Holdings, headquartered in Cambridge, is a UK-based company operating in the semiconductor and semiconductor equipment industry, boasting a workforce of 5,963 full-time employees. The company went public on September 14, 2023. ARM specializes in developing and licensing intellectual property IP for various devices globally, offering development tools and expedite product development across applications ranging from sensors to smartphones to servers. While the company currently derives a substantial portion of its revenue from mobile communications, it positions itself as a pivotal player in the future of artificial intelligence by supplying chips tailored for AI applications. As a microprocessor architect, ARM competes with x86. ARM's popularity has surged in the smartphone industry, constituting 50% of its revenue from mobile electronics. Major industry players like Nvidia, Samsung, Amazon, AWS, and Apple rely on the ARM's code for their designs. ARM's energy-efficient architect makes a preferred choice in the realm of mobility. The competition between different coding languages and architects, such as ARM and x86, carry significant implications in the tech industry. With approximately 70% of the population likely using ARM-based chips, the mere mention of artificial intelligence and the utilization of ARM-based chips in the industry could drive the stock even higher. This video aims to provide a comprehensive insight into why ARM Holdings is a strategic investment backed by its position in artificial intelligence, mobile communication, and efficient coding language. To comprehend why investing in ARM aligns with my investment philosophy, it's imperative to grasp the principles guiding my approach to the stock market. When navigating the complexity of this market, it's essential to select a strategy that resonates with the personal preferences and aligns with a specific investment goals. In my case, my investment strategy is firmly rooted in a consistent weight of evidence, rule-based methodology, and a top-down approach incorporating analytics, data-driven insights, and technical analysis. I actively engage in trading across various time frames, encompassing short, medium, and long-term perspectives, with the unwavering emphasis on the effective risk management in all my trades and investments. At the core of my approach lies a rule-based system which introduces a disciplined methodology to decision-making, effectively mitigating emotional influences and impulses of action in the investment process. This strategic foundation has consistently guided my investment journey, providing a structured framework for making informed decisions in this dynamic landscape of the stock market. Let's start with a three-part process focusing on ARM. Our three-part process starts with the overall market, breaking it down into the sector, and then breaking it down to the individual securities. We clearly believed last year was going to be a bullish year in the stock market, and we clearly said on the overall market, buy on the dips. We chose the most powerful sectors, and this year we still feel the most powerful sectors are semiconductors and artificial intelligence. After picking the most powerful sectors, then we go into the individual securities. Last year, we had winners like Nvidia, AMD, SMH, the semiconductor ETF. And now, in this video, we are adding ARM, ARM. Today's title is ARM Holdings, Buy on the Pullbacks. Disclaimer: the information provided on our channels for educational informational purposes only, is not intended to be a substitute for professional financial advice. Protect your capital by all means. If you lose money, do not sue me. That's why we're saying this disclaimer. Let's start from the beginning. We talked a lot about a top-down approach. The top-down approach is starting with the QQQs, which is still in a growth phase. We have broken it down next into the semiconductor stage. As you can see, it's trading above the moving averages, and even though a pullback has happened yesterday, which we have been anticipating and it has not even been that bad of a pullback, we expect in the intermediate term and the long term that this semiconductors will lead the way. What are some of the top companies in semiconductors? Well, we picked Nvidia and AMD as two of the top holdings in our top 10 IOI portfolio holdings. We've held most of these positions for over a year and 2 months, and we see no reason not to keep buying on the dips on these selective semiconductors. So if the overall market will be somewhat positive this year, not as good as last year, but still up, the semiconductors are leading the way on the NASDAQ 100 and the S&P 500. We are specifically looking for what semiconductors or what other sectors are leading the way. Who does Nvidia use? Who does other industry people use? Thus brings us to ARM, ARM. If you look at ARM, they released earnings and they quickly went from 80 to somewhere topping at 160. And then the inevitable pullback happened. We love gap ups to buy. We do not short into a company that's trading above its moving averages on high volume, and just because it's hitting all-time highs, 52-week highs, this is for a reason to buy on the pullbacks. What are we specifically looking for on our buys? What is our investment philosophy when buying? Are we in a bull market? Check. What are the oversold indicators telling us? Well, that will go over in a few minutes. Is ARM a cheap trick? Is ARM a cheap trap? Obviously not, as it has significant upswings. Until this huge breakout, we did not seem to focus on ARM as much as Nvidia or the semiconductors itself. But if probability tells us with such a huge move on such huge volume on the intermediate term and long term, we will see numbers higher than what we have today. Are we prioritizing uptrends? This is clearly on an uptrend. Will we have a stop loss in play? Yes. Have we maintained consistency in our approach? For over a year and 2 months, we've been telling you the same approach has been working. Now, on February 14th, Valentine's Day, we are adding ARM into our position. ARM, initial strong bullish recommendation, buy crossing and closing above 137.50, or better yet, do buying on pullback if we're lucky enough to see 94 to 110. Our investing stop is at 46.50. The reason we are investing in ARM Holdings is, first, it is on an uptrend on high volume. It is in the hottest sector we are right now in a bull market and looks to eat up its competition fundamentally in the next 6 months. Remember, one of the Magnificent Seven is Nvidia, and Nvidia has been a big winner for us. Definitely a good play to add into our Nvidia strategy is the ARM position. Thus brings us to the short term. Our short-term indicator is at 69.58. Usually, if this thing is going to run a lot higher, we don't see the zero, but we will be waiting for a little further pullbacks in the price, even though at time of filming, ARM is up 8 to 10%. If you look at our short-term indicator, medium-term, and long-term indicator as it swing, we would love this to go down a little bit lower, or the overall market to correct itself in the next 1 to 4 days, which will thus bring this price down a little bit lower, or work off the overbought and euphoria on the stock, so we'll have a position to get in. As you know, we look at the overall market and we would love to start buying ARM if the overall NASDAQ 100 is at a number at 25 and not yesterday's 44.52. We'll also be looking at the CCI indicator for this security, as we would love this number to come closer to zero and then wait for this to turn upwards. We are looking for a high probability trade, and we have yet still not invested in ARM, and we might miss out on our ARM position, but we are clearly looking to get into a position in ARM Holdings. On our sentiment analysis for the last 7 days, about 80% of the news articles are positive, where 9% are neutral and 11.5% are negative. On the financials of ARM, it is a $5 billion revenue with operating income of $774 million and net income of 606 million. This is not a value company, obviously, as it is trading above PE ratios of the usual semiconductors, but thus saying that the premium you're getting for what I think will be the #1 chip architecture in artificial intelligence and mobile, it is ARM. If this video provides value, please subscribe and click the thumbs up button. In the next few days, we will, of course, come up with our market overviews, other individual stocks we have either recommended or new recommendations, and certain indicators we are using. You know the catchphrase: study it, analyze it, adapt it. Peace.